Hello, and welcome to a new episode from the Markets Middleman. Today is Monday, January 26th, and I would like to share my forecast going into this great week. Notice before I start that none of this are intended to be a financial advice. This is just my personal opinion, and it's for educational purposes only. So please, if you're about to take any action due to those analysis, do your own analysis, take any step based on your own risk. So, with that being said, last week I made a midweek update. It was due to the major shift that we witnessed on the DXY. So, after I was bullish on the weekly time frame, noticing that we broke above this breaker, we left a weekly fair value gap, things are looking bullish until we find out that no, from Monday market confirmed that we are definitely bearish and it continued throughout the week. So until we see this week closing definitely bearish below this breaker and this area over here. Now I call this a weekly breaker, but in fact it's like an area of breaker blocks. So before I really do anything on the lower time frames, this is where I want to focus because this is where the liquidity is hiding, and this is institutional level. So yes, this is a weekly breaker. I get that, okay? But after such bearish momentum, it's kind of hard for price to push back up until such areas, even though it's still fine, okay? It's still possible. Anything is possible in those crazy markets. And especially that this week we have the Fed interest rate on Wednesday, so this is really possible. But however, where I'm focusing before this weekly breaker is this level over here. Notice how many weeks price was chopped around this level, at least on a weekly closing basis. So if you ignore the wicks, okay, just remove the wicks for just a second, okay? Let's place that in a box taking this candle's high and this candle's low, okay? And notice how important this level is. You see, so yes, this is the first and the most important area of interest for the DXY for a continuation lower. It also carries with it the low of this breaker. So sometimes I take the breaker from the body if the wick is very long, but if the wick is something like this, it's okay to carry it from the wick. That's just my opinion about breakers. But where I'm definitely interested is within the closing bases of those two candles, which creates this box over here, which is very important. Liquidity was trapped within this level for months, and especially in summer, August, September, and then yeah, we had the interest rate from September that changed the market structure for a second. So taking this into consideration, now I can go into the daily time frame and I want to see where does this area lies according to the daily time frame. So when I go into the daily time frame, things really make more sense. So I see that this area over here was a previous daily bullish fair value gap. Notice how many days price had respected this bullish daily fair value gap. So notice the close of Friday, it was right at this fair value gap, which means that the algorithm is still respecting somehow this level. And notice where the weekly order block, weekly breaker block. It's right at this liquidity over here. So the weekly breaker is just giving me a midpoint of this inverse fair value gap. So this is where I'm gonna be focusing. This is where I'm gonna be focusing going into next week. One last thing, and remember this very well because we will invert this into the EU chart. Notice this 2 hour fair value gap. Where is it nested? It's just nested right at the weekly breaker slash the midpoint of this daily fair value gap. Of course, market can just close exactly this gap open and just keep on going down. That's not a problem for price, or it can even go back up into the weekly breaker and then go down. That's not what I'm saying, but I don't want to give a very general view in these forecasts. I just want to be specific. So in case price wanted to take this level, I'm gonna be very patient to short. In fact, I want to see a breaker that gets displaced below. So then, yeah, okay, I can be convinced that prices no longer want to go into the weekly breaker block. But if I see that price is still not displacing lower, and even though it tapped into this imbalance over here or gap open, I still want to see a push up into this fair value gap, which aligns perfectly with the weekly breaker block, and then I'm gonna be placing my selling positions over here. Just before I move forward into the EU, I just want to make a quick recap about the midweek update that I've done on the 12-hour breaker block over here. Guys, those levels are not a joke in price action. And these are textbook examples. It just takes a little bit of patience to wait for them to show up. And going into such time frames as the 12-hour and 6-hour, they just eliminate a lot of noise. So, and they give you just exactly a very specific level that price would rotate from. So this was really a great move that we were able to catch last week. And if you haven't watched that video, you can also watch it. It's just the video before this one, also to understand more where this idea came from. So moving forward into the EU right now. So the euro is telling us something very nice, that it's somehow ready to break out of this ranging markets which had been trapped since June. So this is really a big liquidity, and usually when price break out such like long ranging modes, it just break out for good. So I think it's just a matter of time where we're gonna see a continuation in EU targeting this buy side liquidity over here as first target, this weekly fair value gap to fill it out fully, and then target those two relative equal highs as well as the buy side. So really the targets for the upside is very obvious. It's just a matter of time and price to know exactly where you're gonna be focusing to join buyers. So first obvious point of interest on the weekly is the weekly breaker block. But again, market can still go up, sweep this buy side first or run on this buy side, and maybe later would retrace like a deeper retrace. But after such a weekly candle, okay, and a lot of heavy news are coming in, and just like some fundamentals that I'm not thinking about, as in to know which direction the dollar is going, because the chart, I believe personally that the chart is gonna tell me what the fundamentals are gonna do, but and in fact you can anticipate whether the news is gonna be bullish or bearish just for the fact of the weekly close. But what I'm saying here is the following. I don't expect a very sharp retraces from the euro, at least for this week. So I expect this week to also be very bullish according to what I'm seeing right now. So yes, I do have a weekly breaker, but this is not where I'm focusing for this week. In fact, the most specific area of interest that I'm gonna focusing on in the euro comes from the daily time frame, as well as we have this breaker block over here. That's very important. Or in this case, if price wants to be very bullish, it can just tap into the wick of it and then target this buy side, as well as a 12-hour breaker. Of course, usually they are at the same level, they just differ within few pips. But I'm gonna give you something to uh, really observe over here. And again, I'm not saying that 100% this is gonna happen. Market just can fill out this gap, just exactly what I said on the DXY, and still go up. Okay, but if market is gonna go up, I need a confirmation for that. But if market would have taken this level over here before it shows a potential move to the upside, I'm gonna be fully sized in at this level, and this level is on the 2-hour time frame. Okay, so notice something. Notice how this last wave had displaced this buy side liquidity, did not tap into the major buy side yet. So do I still have potential for the upside? Obviously yes. Okay, then the very next question that comes to my mind is where is my best specific area of interest? There could be a lot of areas of interest, okay? But if you want to be specific and you look at this area of interest and you say that this is exactly where my order is going to be, no matter what the price is saying, no matter what the fundamentals are saying, no matter what time, no matter what session, this is exactly where I want to be in price. For me personally, it's this level over here. And I will give you two reasons why. First, it's an old 2 hour breaker. Okay, it's a 2 hour fair value gap. The other reason is that it's near the 50% range of this move. So I'm buying from a discount over here. It's not like a high point. Okay, and by this time I already saw the accumulation. So I think that price would manipulate some people early on this week until they manipulate them again for the downside to fill out this imbalance over here and just continue its push to the upside, and probably maybe we see another run on even on this liquidity. Just as I mentioned on the weekly, we've been trapped for a long time within this range, and if price wants to break out, it would break out aggressively. So this is the exact area that I'm looking at. On the 4 hour time frame, it's just the bottom of this fair value gap. So it's as if I'm asking price to mitigate all of this 4 hour fair value gap and then continue its push to the upside. Last but not least, and why I really like this 2 hour. So another reason is that if I go into the 1 hour time frame, I see that this is also a 1 hour fair value gap with an order block. And usually the highest probability fair value gaps are the ones that comes with order blocks. So price can still go down until this level, but I don't want to see price violating this 1 hour candle. So this was the 1 hour candle that broke above the previous market structure. So I don't want to see this 1 hour candle, okay, which is the PM session during Friday. I don't want to see price violating it. Otherwise, there would be something wrong. But I think the highest probability for price is that it already accumulated one more manipulation, maybe a little bit of manipulation for the upside, and then manipulation to the downside, tapping into this level, and then move to the upside. I've repeated this several times, but sometimes um, it takes it takes us few different times or few different ways until we understand. Alternatively speaking, and I told you something, in case price don't want to reach this area, okay, let's say just price wanted to rotate from here and just go back up before reaching my point of interest. I do have an alternative for this, and the alternative is very specific and at the same time repetitive. So notice over here within this correction over here, okay, notice this breaker block, how when price on the 2 hour time frame closed above it, then it retraced back to it and then continued its push to the upside. So if price wants to go up from here, it would have created a breaker block that would price like to displace above it. So then I can join buyers after I see a breaker that got displaced to the upside. Then I can be convinced that okay, price no longer wants to go up, down into this point of interest. So this is my plan for the euro. So before I move ahead from the EU, I see that this structure that we've mentioned in the midweek update is really worth noticing in case you haven't watched the last update. And I want you to really observe when price displays higher this aggressively, leaving behind such a critical point of interest. I want you to observe and learn really what happens around such levels that are institutional on higher time frames and they really don't joke around. So, in case you were able to join buyers from this exact level, that's great. If not, I want you to study price action, and this will occur over and over again. So, this time it happened through a breaker. Next time, we could have had a 12-hour order block, just like this one over here, just like this one. Um, Again, those stuff will repeat over and over. My objective is to myself recap with those kind of forecasts, and as well as make you aware of what really works in the markets, which is again working just for me doesn't mean that it's working for everyone, but those are the kind of stuff that I'm really studying and working on mastering them throughout my trading career. So I hope that you really enjoyed this update. Yes, I have a quick update on GU before I let you go. So yes, we can't let this forecast go without our friend the GU. Um, and yeah, what I see here is the following. Is very straightforward and very simple. Okay, it's going to be definitely shorter than my outlook on DXY and EU. I see an inverse daily fair value gap. Okay, what made me respect this daily fair value gap is that price itself respected it. Okay, and it wasn't the kind of fair value gap that price would take the bearish momentum enough to shift all of the the price, this structure, this structure shift. I can edit those kind of mistakes, but I really don't have time to go through the video and edit them again. So you can have fun while you're watching this forecast. But anyway, I really respected this daily fair value gap for the fact that price told me that yes, I'm a fair value gap that you will respect through time. And same as it worked bearish, I expect it to work bullish. But at the same time, the thing with inverse fair value gaps is that I cannot just depend on the upper boundary on it and that's it and just buy from here. I need to align those inverse fair value gaps, especially if they come within the trend like this. I need to align them with something else. So, like, there's a very simple area of interest which is on the 4-hour time frame for GU. So, if price was able to balance this 4-hour fair value gap, it would have balanced all of the fair value gaps within the last displacement. So I'm taking this as the last run on liquidity. I'm taking this as a fair value gap. Yes, it do exist. So I think also same as EU. Maybe price, even though price swept this high and then displaced lower, this will still be very valid. Okay, this will still be so valid. So what I'm anticipating from GU is a fake displacement to the downside, tapping into the 4-hour fair value gap, which is approximately the midpoint of this daily inverse fair value gap. And from here, again, if price wanted to go up, displace higher before tapping into it, then it would already give me the confirmation to join buyers. Now the obvious targets for GU is this buy side and this buy side liquidity over here. And just like what I said on the EU, I think the GU hadn't just broke above this range over here. So we can potentially be witnessing the breakout of all of this structure and the continuation of the trend that started within January. So I'm really expecting something like this within the upcoming days. And yeah, going into February, I think the market is gonna continue on trending higher, but definitely we're gonna have our checkpoints to join buyers or even sellers. So this is another reason why I love those markets because they are dynamic. Yes, right now I'm fully bullish, but I need to listen to price. At any time, things can change, and as a trader, I need to just adapt into those market conditions, update my levels, and just move on. So, again, I now for real, I hope you enjoyed this forecast. I'm looking forward to hear your opinion in the comments. Let me know what you like. Let me know in case there's anything that you would like to ask or you would like me to touch on. And as always, be blessed, great days ahead, and let's go.